go on the record and share my screen here. Okay, so does that look okay? Can everybody see that all right? Seems nodding. Great. Okay. Well, we certainly want to thank our sponsors for the Lab Venture Challenge. That includes the Colorado Office of Economic Development and International Trade, which is not only a sponsor for the competition, but provides part of the funding that's available through LVC, Berg Hill, Greenleaf, or Shitty, and Lathrop and Gage, two of our close partners for legal representation. So let's begin. There's Tintin Zhu, a professor of molecular, cellular, and developmental biology and multiple past winner of the Lab Venture Challenge. So what we're here for is to bridge the commercialization funding gap. As many of you know, it is challenging to fund commercialization projects out of a university. Namely because often we start off at a very early stage, too early for private investment capital, and certainly well before there is revenue available from a new business. And this, sometimes called Valley of Death, can be bridged in a variety of ways, and the Lab Venture Challenge is an excellent way to do that. So this provides funding and also market and business training and development, so that you can not only bridge the funding gap and de-risk the technical aspects of your project, but also de-risk the market aspects. So coming out of Lab Venture Challenge, we want our awardees to not only be able to have much more certainty about their technical prospects, but also certainty about their market prospects. So there are two phases to the Lab Venture Challenge funding opportunity, phase 1 and phase 2. Phase 1 provides $125,000 grants, plus all participants, all awardees, will also complete the Research to Market program. Colin mentioned that briefly, that this upcoming Starting Blocks program, Research to Market, is like Starting Blocks on steroids. So you will be learning how to find a very specific methodology of how to find a strong product market fit for your invention or your technology, and also understanding the ecosystem within which business decisions are made in your market. We expect to award 8 of these $125,000 grants this year. And a little bit of historical reference. Typically, the Lab Venture Challenge has seen funding rates of about 25 to 35%. It really depends on the year and the number of proposals that we get, but certainly it's a very encouraging funding rate with good odds. Phase 2 awards are new this year, and these will provide grants of up to $50,000 to past winners of Lab Venture Challenge. So these are more advanced commercialization projects, and these $50,000 grants will be newly available this year. So we're looking forward to that as well. We expect to award 5 of those. So in total, 13 awards expected this year, and well over $1 million. So let's talk about the impact of this program. Again, I'd like to stress the long-running success of the Lab Venture Challenge and its different names that preceded it. So in total, we've made 55 awards and over $5 million over the last period of, let's say, about 8 years. Out of those 55 awards, 39 new startup companies have been created to commercialize the innovations that are funded through Lab Venture Challenge. And those companies have gone on to date to raise over $90 million in startup funding. So you can see the data behind how powerful it can be to have these bridging or these gap funds that can open up venture capital upon their completion. I do want to let you know about one case example to put a little more face and name behind some of those success metrics. So this here is part of the team from the Sarah Sawyer lab in MCDB at CU Boulder. And they were a winner in 2019. You can see them there outside the Med. And this is reminding me, sadly, that a lot has changed since 2019, including closing the Med prior to the, or during the pandemic. So you can see them with their big fake checks, $125,000, and also an Audience Choice Award for another $1,000. Now, Darwin Biosciences was the company that was formed out of this successful Lab Venture Challenge award in 2019. Right after they won, the pandemic hit, and the company was able to successfully pivot into the COVID-19 diagnostic space. They have commercialized a test known as COVID Lab. There's a little cartoon there showing that based on obtaining a saliva sample, a simple test strip result can show within an hour whether or not somebody has SARS-CoV-2. So this was a great example of leveraging the Lab Venture Challenge funds to create an innovative product that was able to really benefit a large number of people. In fact, over 20,000 COVID tests administered across Colorado and Nebraska by Darwin Biosciences. So again, an example of that LVC funding being a bridge. Darwin Biosciences was successfully able to secure seed funding and a major contract for production coming out of this award. So I'm going to pass things over now to Deepika, who's going to go into much more detail about both the Phase 1 and the Phase 2 awards that are available under Lab Venture Challenge. And Deepika, I can just advance the slides for you.
Or you could just stop sharing, Brent. I can control on my end. I'll just share my screen.
Sure.
Okay, can everyone see this okay?
Yes.
Okay, awesome. So thanks, Bren. Hi, everyone. I am Deepika Singh, and as Bren mentioned, I'm going to be going over some of the more finer details about the LVC grant programs. So we'll start with LVC Phase 1 eligibility criteria. So number one is that the invention has to be disclosed to venture partners. The invention must be owned by the university, and it should be disclosed to and managed by venture partners. Please note that CU Boulder and UCCS inventions are managed by Venture Partners Office. However, the Denver campus inventions are split between Venture Partners and CU Innovations, which is the tech transfer office at the Anschutz campus. So if you are a potential UCD applicant, reach out to Bryn or myself to ensure eligibility. Next, the invention should fall within the 7 advanced industries as required and laid out by the Office of Economic Development and International Trade, who is the primary sponsor for this program. So we do take this requirement pretty seriously. And then next, the primary applicant on the LVC application has to be an eligible principal investigator per the Office of Contracts and Grants rules. So, if you have any questions about eligibility, just Google Principal Investigator Eligibility Chart, CU Boulder, and it will take you to the right link. For the most part, professors and full-time faculty are fine to be the main applicant, but sometimes a student wants to be the primary applicant, or a research associate or postdoc, and and they may require additional approval from their chair. So the funding received from the primary sponsor, OEDIT, whether it's under the LVC grant or the OEDIT Run Proof of Concept grant, cannot exceed $150,000. So if you have received one of these awards in the past, please be cognizant of this funding. And you can't have multiple LVC and OEDIT awards active at the same time. So if you have won this funding in the past and want to take advantage of it again, reach out to Bryn or I to ensure eligibility. And then the last thing I want to mention on this slide is that if there is a startup associated with the technology, with the innovation, then that partnering company cannot have raised greater than $500,000 in capital for the proposal to be eligible for LVC funding. So this is because, LVC funding exists to support early stage ventures. So if the partnering company has already raised greater than $500,000, then we don't think of that opportunity as being suitable for LVC, and we think of it as being a little ahead in the game, if you will. So next, we're going to look at LVC Phase 1 application and participation requirements. So this goes without saying, we do want all applicants to complete and submit a 4-page online application. The link to the application is now available on the LVC webpage. The applications are due on August 24th. So, if you want to get started early, go for it. So inclusion of patent expenses in the LVC budget. So we are requiring that if you expect for the technology to have patent expenses, IP filing expenses during your LVC award term, then we do want you to build those expenses in your LVC budget. If you have any questions about this, reach out to your venture partner's case manager, and they can help you figure out what the approximate amount would be. So next, we require all LVC finalists, so not all applicants, but all finalists, to participate in our pitch coaching seminar, followed by pitch practice sessions with business mentors, EIRs, and venture partner staff. We have found that pitch preparation ahead of the finals has been pretty beneficial to past LVC finalists in delivering an effective and succinct 10-minute business pitch. So, we used to highly recommend this in the past, but now we're requiring that finalists do this. And this one is a no-brainer. So like if you are a finalist, then, you're going to be required to give a pitch at our final showcase event, which is scheduled for November 3rd for bioscience innovations and November 4th for physical science and engineering innovations. And then, as Bryn was mentioning earlier, we are going to ask our LVC winners to enroll in and complete our research to market program, which is a customer discovery program. So now we're going to look into the LVC Phase 1 timeline. So the first is that the invention needs to be disclosed to venture partners. So if you have already disclosed your invention to us, you're good to go. If not, please do so by July 27th. Next, we want you to consider participating in our upcoming Starting Blocks program. The dates are July 31st and August 16th. And as far as what it is, Starting Blocks is an introductory level customer discovery program that's designed to teach engineers and researchers, find a market for their technology, their product, and find customers for their technology. So a good percentage of past LVC finalists had completed Starting Blocks ahead of the competition. So we highly recommend it. And then, you can take the learnings from this program and put them into your LVC application, thereby further bolstering your application. So that's Starting Blocks. Next on the timeline is the LVC budget. The final budgets need to be formalized and submitted to the Office of Contracts and Grants by August 17th. UCCS and UCD researchers will submit to their respective grant and contracts office. August 24th is the deadline for the online phase 1 applications. And once these applications are submitted, they go to a panel of reviewers we recruit. Venture Partners Office plays no role in the review process. We do that so that we're employing an unbiased approach to our evaluations. And then once we get the scores back from our judges, we notify all applicants as to whether or not they're moving forward in the competition. So we plan to notify applicants the week of September 17th, and then we're looking at weeks of October 21st and 27th for the pitch coaching seminar, as well as the pitch practice sessions. So the pitch competition is going to be held on November 3rd and 4th, as I mentioned earlier, and the winners are going to be announced that same day shortly after the competition. And then your work doesn't stop there. So there is a short questionnaire that our primary sponsor requires for all awardees to fill out. This questionnaire needs to be completed by December 1st, but it's a pretty straightforward questionnaire, and your OCG proposal analyst will help you do this, but December 1st is a hard deadline to complete this survey. And like we mentioned earlier, so we're going to require all winners to complete research to market. Colin may have the dates. I don't, but we think it's going to be offered sometime spring to summer of next year. And then the last point I want to make on this slide is that even though the winners are announced in November, it takes OCG and OEDIT a few months to complete the paperwork associated with these awards. So, you should expect to have the funds dispersed to you sometime late April, early May of next year. So LVC phase 1 proposals, you can request up to $125,000, up to $100,000 for technical milestones, and up to $25,000 for business development expenses. You cannot ask the full $125K for technical milestones. This is because LVC is a commercialization grant. So, we require that if you're going to ask for the full amount, that you allocate a portion of that funding to go towards business development related activities. As for the proposal itself, it focuses on 3 primary areas. So, introduction to the technology, the research area, your value proposition, things like that. And next is the commercial opportunity, like how big is your market, you know, who are the market players, things like that. And then lastly, the proposal objectives. So what sort of technical and business development objectives you intend to accomplish if, you know, by using these funds. So a question that we get often is, how can we leverage the $25,000 business development funding? So as I mentioned earlier, if you're expecting IP / patent expenses, do build those into your budget. Other areas where these funds can be utilized are, you know, by enrolling in an accelerator program. I list 2 local accelerators that we highly recommend. Some other places where this funding can be spent would be customer discovery, you know, expenses relating to startup formation, startup operations, certain travel, website development, et cetera, et cetera. If you do have a question about whether a certain business development expense would be approved under LVC, just reach out to me and I'll get you an answer pretty quickly. So now we're going to move on to our phase 2 award. So as Bryn mentioned earlier, we're rolling out our phase 2 awards for the very first time this year. You know, under this award, an applicant can request a max of $50,000, $25,000 for business development, $25,000 for technical development. And in addition to already covered eligibility criteria under the phase 1 slide, there are a couple additional criteria for phase 2. So the applicant obviously needs to be a past recipient of LVC phase 1 or OEDIT POC or another similar commercialization grant. We ask that, and there are no other active OEDIT or LVC awards at the time of the phase 2 application submission. And if there is a startup involved, we want the option or the license with the startup to be in place prior to the application deadline. And lastly, you know, if there is a startup and that startup has won OEDIT's early stage capital and retention grant, please reach out to me so I can contact OEDIT and make sure that you would be eligible for this funding. So the timeline for phase 2 is pretty straightforward. The invention submission form is still going to be due July 27th, but if you are a past recipient of LVC phase 1, chances are pretty high that we already have your invention disclosure. Now, if you have made improvements or follow-on inventions, things like that, please do submit those to us by July 27th. The starting blocks dates still stand July 31st and August 16th. The budgets for phase 2 are due to OCG on September 17th. So we have built a month between these two, between the phase 1 and phase 2 programs to give ourselves and our OCG colleagues a little breathing room. So budgets are going to be due September 17th for phase 2. Phase 2 applications are going to be due September 24th. We are still working on putting this application together, but we hope to put the link on our LVC webpage either this week or early next week. So again, the phase 1 applications are due August 24th, phase 2 applications September 24th. Let's see. So there's not going to be a pitch competition for phase 2 proposals. So, you know, we'll still recruit a panel of reviewers to review your phase 2 applications. But once we get their scores and comments back, we will immediately notify the winners. And we're looking at the week of October 25th for that. You would still have to fill out the OEDIT questionnaire by December 1st. And again, if you haven't done research to market as part of your LBC Phase 1 award, we're gonna require you to enroll in and complete research to market next year. And again, we're looking at the April to May timeline for the award dispersal. Okay, Bryn, I'm gonna hand it over to you for this portion of the presentation.
Great, thanks. We'll just keep it on your machine, so we don't have to switch back again. But so folks, want to stress here that this is a commercialization competition. So your reviewers and review criteria, which is what I'm going to talk about now, are different than when you submit a grant, let's say to a federal agency, where your research peers are going to be the reviewers. Do you want to go back there? Oh
yeah,
there we go.
Yeah, sorry. Yep.
So here's your reviewers. It's going to consist of investors who specifically invest in startups coming out of universities, in folks who run startup accelerators, again, startup accelerators that are specifically partnered with universities, with folks who have started and run and sold the types of companies that are eligible for LVC, and with industry executives from your specific sector. So these are the types of people who and professionals who will be potential partners for you. And in fact, there have been multiple instances in the past of Lab Venture Challenge finalists and awardees forming partnerships with reviewers after the program has, after the finals has closed out. So they have a different lens on, right, than typical academic reviewers. And Deepika, if you want to go to the next slide, we'll just show you what those review criteria are. So those are to have a clear value proposition. A value proposition, you may think, well, what is that exactly? I think I know what that is. It's what you're making, who you're making it for, and why do they care? And if you haven't spent a lot of time reflecting on that, then Starting Blocks is definitely for you. We highly recommend that. I'm going to talk about Starting Blocks a few times in the next few minutes here. The next is, what is the pathway for your early stage technology to make it into the market? For example, what happens after Lab Venture Challenge, and what sort of partnerships are going to be required? Is there regulatory issues to look after? So the reviewers really want to see that you understand the full pathway through to the market, not just what you're working on under the grant. The progress that you've made to date, so any experimental validation that you've already obtained, any market validation that you've obtained, for example, through customer discovery interviews. The fourth criterion here is the use of funds. So want to be sure that these funds are specifically answering the most critical questions. So I'll give you an example of that. Rather than exploring another potential market application for a technology, are the use of funds advancing your technology towards the beachhead market? And if there are key questions about competition, for example, are your funded objectives addressing those questions? Intellectual property is going to be evaluated again here. The economic impact for Colorado. So that typically means details about your company and the jobs that have been created or could be created in the future. That's critical for the Office of Economic Development. And then lastly, this is a new criterion this year, your team. This is critical. In fact, when investors are looking at your opportunity post LVC, this is the first thing that they look at is your team. So do you have either the folks already on the team to carry out the most critical functions and needed functions, or have you identified what those roles will need to be in the future and how you will address them? And lastly, we want every applicant to address a DEI, or diversity, equity, and inclusivity strategy for their team going forward. Okay, thanks, Deepika. We can go to the next one. So this is the last slide I'm going to cover, and this is 7 hints, 7 steps. So maybe this is the one that you most want to sharpen your pencils on. These are not in the details on our website, whereas we're going to have all the other details, how to apply, timelines, all that's going to be on the web page. But this is some insight based on past applicants and the outcomes that they've seen. We've been running LVC and different programs like this for over a dozen years, and there are very clear takeaways about who is successful. So the first, starting blocks, we've mentioned this a few times, critical to understand your market, your competition, the product market fit, and ideally having spoken to a few potential customers and partners. Starting blocks is going to provide those for you. So really important there. We've been running starting blocks concurrently with Lab Venture Challenge the last 2 years. And the funding rate from those who do participate in starting blocks is about 50%. The funding rate from applicants who do not participate in starting blocks is lower than 10%. So I'll let the data speak for themselves. Knowing your market and competition, that's really more of the same. That's why you go into starting blocks. The value proposition that I just introduced, again, addressed in starting blocks, but you want to have that very clearly laid out at the start of your proposal so that the reviewer instantly understands what you're doing it and what the commercial application is. So a great way to tell this is through a story. There is a timeline that goes from your current status, the current progress that you've made, and where you need to get in terms of bringing a product to the market. Lab Venture Challenge is a piece of that story, but how that fits into the larger story, if you can show an understanding of the overall pathway, that's going to be a huge benefit and show and demonstrate a lot of clarity to the reviewers. As Deepika mentioned, 25,000 of the 125,000 in phase 1 and 25,000 of the 50,000 in phase 2 are going to be eligible for business development funds. So expenses to advance the startup company. Please be very specific as you can. That means that for the $25,000, don't just say those are for business development, but breaking it down into, let's say, how we want to work with this individual consultant to do these activities. We want to go into this accelerator, let's say Innosphere Ventures. Over this time period, we need a certain amount for intellectual property, to form legal costs to form our venture. That type of specificity, again, is just going to show the reviewers that you've really thought through your commercialization plan. On your team, identify what roles you need and who's going to roll them, who's going to fill those roles. It's fine to say that certain roles are still TBD, but demonstrate that you know what composition of team that you need for your company. And then lastly, please leverage the feedback that's available to you. If you can get your proposal done early, send it into venture partners. We'd be happy to review it and give some suggestions. We'd also be happy to pull in some of our mentors and entrepreneurs in residence. Many of them are on the call here. They can also give you some good feedback on your commercialization plan in particular. And I think with that, Deepika is going to take us the rest of the way.
Yeah, thanks, Bren. Okay, so we're down to our last 3 slides. We thought it would be good to draw a distinction between the LVC grant and the 2 OEDIT grants that cause some level of confusion each year. So to recap, the Lab Venture Challenge is hosted by Venture Partners. The money goes to a CU lab. The CU Boulder, UCCS, and certain UCD innovators are eligible to apply for this funding. The maximum budget you could ask for under LVC is $125,000. There is a matching fund requirement of 1 to 3, so non-state funding to state funding. And for Boulder applicants, Venture Partners provides the match. The application deadline for LVC is August 24th. And the LVC sibling program is run by the Office of Economic Development and International Trade under the name Proof of Concept Grant. The funding recipient, again, is a university lab. All CU campuses are eligible to apply for this funding. The maximum budget you could request under this grant is $200,000. Again, the matching fund requirement is 1 to 3. However, Venture Partners does not assist with matching funds for proof of concept grants. So the applicants are required to identify and source matching funds prior to the submission of their proof of concept proposal. The application deadline for proof of concept grant is September 1st. And lastly, the early stage capital and retention grant, also by OEDIT. The funding recipient, however, in this case is not a university lab, but it's a Colorado company or a Colorado startup. The maximum budget under this grant is $750,000, but do pay attention to the matching fund requirement. It's 2 to 1. So non-state funding to state funding. So the company is going to have to come up with $500,000 if they're requesting the full $750 via an investment or a grant. But the company is going to have to come up with the match. And the application deadline for this grant is also September 1st. So that's all we have for you today. There is, let's see, a lot of time left. So we have about 20 minutes for any questions. And, you know, if we are not able to get to your question today, feel free to reach out to us via email. So I'll stop there.
I'm just going to address a question from Carson. Just easier to talk about it than put it in the chat. Carson is asking if somebody is a prior winner of the Advanced Industries POC award, does that disqualify them from Lab Venture Challenge? And there's 2 things to consider here. One is it the same project? So the state will only allow the same project to be funded once. So if it is a different project, that's fine. If it is the same project, then the maximum of $150,000 from the state applies. So if somebody has $150,000 from the state through a past POC award, they would not be able to apply for the Lab Venture Challenge under the same project. They absolutely would for a different project, or if their state grant did not max out that capped amount at 150, they could apply for whatever the difference is. So a little bit of complexity there, but I hope that's clear, and glad to say more if that wasn't clear. So any other questions? I think Grania has a hand up. Yeah.
Hi, thanks, Bryn. I have 3 questions, so I'll just go with them. First of all, with relation to the review criteria, the 7 items, are they weighted equally or are they weighted differently? So that's question number 1.
Equally. I'll just say that because it's a quick answer.
Yeah, great, thank you. Okay, and then when we have to say who we're going to use, for example, in biz dev or accelerators, when we're saying we're going to be using these and that's where the funding goes, do they have to use those whenever the money, because it's a long time before the money actually is dispersed, and some of the accelerators may have started and gone or whatever. Do they have to use them, or is that they can say they're going to use them, and if the people that they want to use aren't available, for example, have got too much work on or whatever, do they have to use those people, or is it okay to say this is what we want to use?
Yeah, I would link it to give yourself some flexibility for time in that way. I identify the key objectives. So let's say complete an accelerator, and you could say, you know, fee of $10,000. That's Innisphere's fee, just as an example. But I would just put it as accelerator fee, startup fee, $10,000. We plan to use, plan to work with Innisphere time depending, right? So you can give yourself a little bit of that. But I think what the reviewers are more interested in seeing is we're doing a startup accelerator, or we are hiring a consultant to look at our regulatory strategy, as opposed to it has to be this specific person.
Okay, thank you. And then the third question, I may have missed something, my line broke up, but in relation to the matching funding, I don't know if you can go back to the slide with all three on them again, Deepika. Thank you. So I have a couple of questions around that. Sometimes I know from government funding, they will allow for past invoices spent or invoiced funding. So for example, if the founder has put in money, their own money, is that allowable in matching, or does it have to be future funding? And what is it? Is it a letter of intent? What is the validation for that funding? So can it be used for already sunk costs, if you like, that has been invested by either the founder or their previous pre-seed, or is it a letter of intent, or how do you validate the funding, matching funding?
So two different answers here, because we've got one Lab Venture Challenge, and then we've got the 2 state programs. For Lab Venture Challenge, all of the match is provided by venture partners, so you don't need to worry about that. But for the state, I'll preface this by saying best to check with them. We'd be happy to connect you with Katie Wolslager, who's the senior manager for these programs. I think that's always a good idea. But my understanding is that you need to have to show a total budget, right? So it would be what you're going to do with the state money plus the matching funds, and so it would be more forward-looking, right? But I will add that you don't have to have the matching funds in your account at the time you apply, right? So a very common strategy here is that a company will get the award from OEDIT. I'm talking here now about the one all the way on the right. They will then go and use that to actually help them raise capital. So if you go to an investor, it's a different story to say, if you put in 500,000, we unlock this 250 from the state.
So a letter of intent, it doesn't have to be a term sheet or anything. They don't have to be a lead investor. They can just be a letter of intent.
Yeah, I think you get 6 months after being selected by the state in order to actually secure the funds.
Yeah, exactly. Agreed. The one thing that I know is that the state will not release the funds over to you unless you show proof that you have secured the matching funding in an account.
Okay, and likewise, the state would give a letter of intent, so you can, pay one off.
Yep, they will do that. Yes.
Okay, thank you. That's the completeness of my questions.
I have a question.
Yes. Hi, Joseph.
Yes.
Hello. I just wonder whether you could clarify what you said about subawards. You said that subawards are okay, but is there a limit? What I'm wondering, and this relates to my question about IP, would I be able to say, okay, I have the grant and I'm going to make a subaward of, let's say, 90% of the subaward will go to the spin-off company so that they can do work. And then all the work they do in the company, they will own the IP. And only 10% of the work will be done at CU Labs. Would that be acceptable?
It likely would not, because of the state's requirement that these are specifically for proof of concept work to happen at the university. Where a subaward is not only appropriate but advisable is if there is let's say a minority of work that really can't be done at the university. So often a company will have certain expertise that is just not available. And so for that to be, to create a subaward, that is much more common, and we've seen that be quite effective. But if a company, if what, Joseph, you're really looking for here is a grant to your company, I really recommend the program on the far right of the screen right now, the early stage capital retention. Those grants do not involve the university. They go direct, all of the money goes directly to the company, and the company is the applicant.
Okay, then just one more thing to clarify the earlier discussion about IP. The answer to my question and just somebody else's question was basically the discoveries made by CU employees. The IP is owned by the university, and by company employees is owned by the company. But if the grant is from the university to do work in the university labs, then even if the company employee shows up one day and has a brilliant idea, that IP will be owned by CU. Is that correct?
Only if they were using university resources, right? So the university doesn't have any IP claim to somebody who's not a university employee, unless they were acting like one, if they were coming in and had special access. So for example, let's just talk through an example. If you are not a university employee, but you're collaborating with a university faculty member, and you together come up with a great idea, the university has no claim on your contribution. If, however, you are, this is more theoretical, right? But you were, spending your days in a university lab operating some, university equipment, and in that process, that might be a different situation. But that is really more theoretical because you probably have some other overarching agreement to work in that way on site.
Okay, thank you.
Mm-hmm. I do want to come back to a question in the chat from Patty, who asks, the application must be submitted by the university, correct? Or can a startup apply with an investor as a partner? So for the Lab Venture Challenge, yes, the application comes from somebody who's eligible as a principal investigator at the university. So that's going to be typically a faculty member, in some cases a graduate student or a postdoctoral researcher. And so the startup can be a partner, right? Can be the commercialization vehicle for the proposal, but they are not the startup is not the applicant in the Lab Venture Challenge. Okay.
I have a question. So this is very helpful. Thank you. We have two programs on the left, the Lab Venture Challenge and the Proof of Concept. We could apply simultaneously to both of them with essentially same project? Yes, you can only accept the award. So if you put the same project into both, if you won both, you'd have to choose one. But that is a very effective strategy to try and increase your odds. And is the timing of the two of them such that we, would know? Yeah, similar, and maybe also about the success rate of the proof of concept one. Is that similar to the Lab Venture Challenge? Sure, much lower. I say lower funding rate. It is so that is the proof of concept, the middle one here. That's statewide. Typically, there might be 2 or 3 POC awards made across all of Colorado, so across all the research institutions. Whereas with Lab Venture Challenge, we're making 8 phase 1 and then another 5 phase 2. So your odds are better with the Lab Venture Challenge, but your odds are best with both. Okay, thank you. And Dan, one other thing you mentioned there was timing. So it's happened before. It's very, it can be navigated the timing wise. I tend to find out around the same time for both of them. Okay, any other questions? I did get one other message in the chat about joining late and availability of the slides. So what we can do here is Kay and or Colin, if the link to the recording could be shared with other registrants, that would be fantastic. All right.
Yeah, that sounds good.
Thanks, Colin. If that's it for questions, we will wrap it up here. We look forward to answering any other questions that come up as you start to work through your applications. And also look forward to any early submissions so that we can help you craft the strongest proposal that you can. So good luck to everybody, and look forward to seeing your applications.
Thank you.